Hey everyone! Today we're diving into the electric vehicle world to talk about Lucid Group, ticker LCID, and why its stock just shot up like a rocket. Is this luxury EV maker a buy right now, or should you pump the brakes? Let's break down two recent Yahoo Finance articles to find out. Buckle up, hit that like button, and let's get started. So why did Lucid stock soar? According to a Yahoo Finance article from September 6, 2025, titled, Why Lucid Stock Soared Today, the big catalyst was fresh analyst coverage from Cantor Fitzgerald. Before the market opened on Friday, Cantor dropped a bombshell, raising their one-year price target on Lucid from $3 to a whopping $20 per share. That's a massive jump, and it sent Lucid stock soaring 13.8% by the close of trading. Now hold up, there's a catch. Lucid recently executed a 1-4-10 reverse stock split, which means every 10 shares were consolidated into one, boosting the per share price. So, while it sounds like Cantor got 7 times more bullish, it's not quite that dramatic. Back when Lucid's shares were trading at about $2, Cantor's $3 target implied a 50% upside. Post-split, with shares around $18, their new $20 target suggests a more modest 10% gain over the next 12 months. Still, that's enough to get investors excited. But here's where it gets tricky. The article points out that Cantor's analyst, Andres Shepard, actually rates Lucid as neutral, not a screaming buy. And with Lucid burning through nearly $3 billion in cash annually and only having about $3 billion left in the bank, some analysts are skeptical. They estimate Lucid won't turn a profit until 2031, if it even survives that long. So why the hype? Let's dig deeper. Now, let's talk about Lucid's secret weapon, Saudi Arabia's Public Investment Fund, or PIF. According to both articles, the PIF is Lucid's majority shareholder, owning over 60% of the company. This is huge because the PIF keeps pumping capital into Lucid, helping it stay afloat despite those massive losses. The second article, Lucid is skyrocketing today, is the stock a buy right now? Also from September 6, 2025, highlights how this backing makes Lucid's financial situation less dire than it seems. For example, Lucid's been posting operating losses like $739 million on just $259 million in sales last quarter. But the PIF's deep pockets give it a lifeline. They've already funded a Lucid plant in Saudi Arabia and committed to buying up to 100,000 vehicles over the next decade. However, there's a downside for shareholders. To keep raising funds, Lucid often sells more stock to the PIF, which dilutes the value for other investors. So, while the PIF support is a strength, it's also a risk to consider. So, is Lucid stock a buy right now? Let's weigh the pros and cons based on these articles. Pros: analyst optimism. Cantor Fitzgerald's $20 price target, even if modest post-split, shows some confidence in Lucid's potential. The stock's already up 12.3% in a single day, so momentum is there. Strong backing. The PIF support means Lucid likely won't run out of cash anytime soon, giving it time to scale up production. Premium EVs. Lucid's Air sedan and upcoming Gravity SUV are getting rave reviews for their tech, like industry-leading battery range. Cons: huge losses. Lucid's bleeding cash nearly $3 billion a year, and profitability is years away, maybe not until 2031. Dilution risk. More stock sales to the PIF could dilute your shares, reducing their value. Neutral rating. Even Cantor's analyst isn't shouting buy. They're neutral, which suggests caution. The articles also mention that the Motley Fool stock advisor team didn't include Lucid in their top 10 stocks to buy, which is a red flag. They point out that other stocks, like Netflix or Nvidia, have delivered monster returns in the past, while Lucid's future is still uncertain. So what's the verdict? Lucid stock is soaring thanks to analyst hype and Saudi backing, but it's a high-risk, high-reward play. If you're an aggressive investor with a high risk tolerance, Lucid might be worth a look, especially with its cutting-edge tech and partnerships. But if you prefer safer bets, you might want to wait for Lucid to show stronger financials or a clearer path to profitability. What do you think? Are you bullish on Lucid, or is it too risky for you? Drop your thoughts in the comments below, and let's keep the conversation going. If you found this breakdown helpful, smash that like button, subscribe, and ring the bell for more stock market insights. Check out the links to the Yahoo Finance articles in the description for a deeper dive. Thanks for watching, and I'll see you in the next one.